What is going on, guys? So look at this market as the worst earnings season in recent memory rages on. Every piece of information for the most part is not good. But the market continues marching forward as if nothing's happening. So let's talk about what you should do right now with your stock investments. And there's one thing out there that nobody is talking about. And it actually scares me, quite frankly. I've never seen it in the market before, and you need to know about it. So let's get started right now. Welcome back, everyone. In this video, I will give you the answer to the question on why has the market continued to run up? I will also give you the 3 things I think you should do right now, today, and we will talk about the one thing that really scares me about this market and nobody is talking about it. And remember, as always, this is for entertainment purposes only. Do not listen to me. So please like the video, as I want this information to get out to as many people as possible. And that is actually how you tell YouTube to get it out there, along with commenting down below. Even if you just write the word first or you suck, it all counts. And we only have to do that because of this stupid algorithm. But people still rule, for now at least. Why has the market continued to run up? Obviously, people tend to focus on 2 things when discussing this market. The first thing people are saying is responsible for it is the stimulus money and the retail investor. A lot of people have received a lot of stimulus money. Maybe some of you out there jumped into investing with the money you received from the stimulus checks. Now, obviously, I don't know the answer to the question for you personally, but I do know that I have seen some things in the market that can only be explained by huge numbers of retail investors. Yeah, here's looking at you, Hertz. Exactly my point. Just crazy stuff happening that absolutely were driven by nobody else but retail investors. Now, I agree, once the momentum starts, the computer traders and big funds that swing trade jump in on the momentum and push those stocks even higher. But there is no doubt in my mind that the momentum starts with the retail investor in a lot of these cases. Not all, but in a lot of them. 1 year ago, just 1 year ago, this kind of stuff just didn't happen. Now it happens basically weekly at a minimum. And of course, the Fed is the other big reason for this crazy run-up. The Fed intervention has been unprecedented. Precedented. I don't know how to say that word. They're making their support during the last financial crisis look like child's play. And no, not the movie. And yes, the bill will come due at some point in time. And that's a scary proposition in and of itself when you're talking about trillions of dollars. But there's no doubt unprecedented Fed support is a monster driver, maybe even the biggest driver in all of this. Because of all that and this crazy run-up, there are 3 things you essentially need to do right now. First, you need to avoid FOMO at all costs. For those of you that don't know what FOMO is, it's simply the fear of missing out. You know, when your buddy posts about making $2 grand this week trading options or some penny stock or something else like that, and you're left just wondering if you should jump in on the fun too. Or you just read about or watch a YouTube video about another stock that has an epic run, and you feel like if you don't jump in right now, you are missing out on a fortune. That's classic FOMO, and that will devastate your investing. There are fortunes made and lost every day in stock trading, and there will be plenty of great stocks to buy and make a fortune on over time. The richest investors ever did not make their fortune on one trade in 1 month. It just didn't happen that way. They were built over years of applying solid investing fundamentals and consistently investing in good and bad times. There is no such thing as get rich quick. And when you give into FOMO, you most likely are chasing that instead of building real wealth, even if you don't know it. So you may not even be conscious that's actually what you're doing. The second thing you need to do right now is have realistic expectations for your trades. So what are realistic expectations, you may ask? Have you ever even thought about that? If you are new to investing, what is a normal return? I can tell you right now, the market has not been normal since February. So if you think anything that has transpired in the past few months is normal, you are sadly mistaken and in for a rude awakening when it does actually, go back to normal. One of the greatest investors ever, arguably the greatest investor ever, only averages just over 20% in a year in investing. Now think about that. That's 20% in a year. Not 20x in a year, not 10x in a year, not even just a measly 1x in a year. Only 0.2x, if that's even a term you can use. So those of you that are expecting to 2x or 3x your money this year have the wrong expectation. Yes, I have stocks that I expect to 2x or 3x over the next 2 to 3 years, but they represent a very small portion of my portfolio. And the reality is, a couple of these companies, no matter how much I love them, and the internet loves them, and other YouTubers love them, are going to lose me money. That is how stocks that have the potential to 2x or 3x my money work. And even if they don't lose me money, it may take 5 years to finally go on that 2x or 3x run. Look at Tesla. It didn't do anything until the end of last year. Basically, I could have bought Tesla in March of 2014 and bought it at virtually the same price in October of 2019. Think about that. Just 9 months or so ago, you could have bought Tesla for the same price it was in 2014. That means Tesla was basically trading flat for 5 years. So all these speculative stocks and growth stocks that everybody's jumping into now trying to 2x, 3x, 4x their money could take years to actually get to that point. How many of those companies that you're investing in right now are actually as good as Tesla? Seriously, think about that and apply it. It took Tesla 5 years to break out. So you have to understand that 2xing your money each year is just not realistic. Get that out of your mind right now. Yes, agreed. Absolutely take advantage of times like these where you can do that, but know this is not normal, and the stocks you most likely are trading are speculative and come with significant risk to your capital or your money. You could lose it all. And the third thing you need to do right now is have a plan for every scenario. Or is it scenario? I don't know. Comment down below and let me know. So what is your plan if the market runs up fast again? Are you going to take profits to invest elsewhere? Is there some other need that money will satisfy? Will you FOMO and buy without a plan? And what is your plan if everything falters and the US or the world economy shuts down again? What is your sell point? Are you holding long term? Are you leveraged? How will you get out of this? And what if the stock market just trades sideways and there is no fall or run up? What is your plan then? How will you handle that scenario for months on end where you just can't make any money? Will you be frustrated and start chasing higher returns? These are questions you want to have answered well ahead of them actually happening. If you make these decisions as the events happen, you will make a bad decision most likely. I have seen it more times than I can count, but emotional trading is where the mistakes are made, and that is when you get burned. This is why I harp so hard on planning, because it brings clarity to situations no matter what they are. But if you have money invested, or want to have money invested, you'd better have a plan for every scenario out there. That's not the one thing that scares me that we're going to talk about next, but that is one thing that absolutely scares me too. And that is people not trading with a plan in place and then relying on chat rooms and comment sections for advice. That's, probably not going to end well. Course is coming on planning soon, but for now, you can subscribe so you can get the nuggets of information on how to do, just that, how to plan. So now let's take a look at the one thing that scares me now. Look, there are lots of reasons to be scared in life, but investing should not be one of them. But think back to what we discussed in regards to the main drivers of this bull run after the collapse in March. Who are the two parties most responsible? That would be the retail investor and the Fed. It's not Warren Buffett, not monster funds deploying cash like crazy. It's not large corporations deploying cash into new businesses, driving everything up. It is retail investors and the Fed.
So what? I don't see a problem with that at all. Who cares?
And that's the problem right there. You don't see why there is a problem with the Fed and us being the leaders in a bull run. The problem, and I just realized I probably said problem way too many times, is that the run is driven by the non-professionals and without the experts ever really getting involved in the run. The Feds are not the expert in investing. but yet they are one of the biggest drivers behind the current asset price run-up. The new retail investors, despite what they say in the chat rooms, comment sections, or on social media, are not the experts. Did investing magically change overnight and the guys managing trillions of dollars all of a sudden stop knowing how to invest? And the average person who watches a YouTube video or two is the new expert investor? That doesn't seem completely right to me. In the end, when the amateurs, whether that be feds or you and I, are the biggest market movers, it typically works initially because there's a lot of us. But at some point in time, it will unravel, and then that's when the pros step in. In the process, when it goes south, the pros scoop up all the deals as we're all selling, and then while everyone else is cursing investing and all those negative articles and everything else are coming out about investing, these guys are enjoying sustained bull runs like we just seen for, the past decade plus or so. So understand that's the dynamic that's playing out right now, and do your planning right now as well. Understand the risk and be ready for anything the market throws at you, and you'll be fine no matter what happens. So show your support for the channel by, liking the video, even if you only got a tiny little piece of value out of this. And consider joining my Patreon if you want to see my trades in real time and get direct access to me, which you cannot do anywhere else. And I think it's going to be a crazy next few weeks. So make sure you are subscribed, which you can do right here, so you can get the truth and all the craziness. And follow me on Instagram if you want to see me fail on that too. I just suck at it. And here are a couple of videos if you want to get a little bit of an opportunity to see how my channel actually works and I'm not just some ridiculous guy with sunglasses. Thanks.